Yes, sir. Shaq Talk Stocks. We back another day, another video. All right. So today on Shaq Talk Stocks to watch. That rhyme. Affirm stock. Today they finally IPO'd. Remember, Affirm talked about this stock a couple months ago, where when the co-founders of PayPal, he hooked up with this. He created his own company where they basically provide you loans to make installment payments for online purchases. So they debuted today, and right after the debut, stock skyrocketed 90%. So just a little information on what's moving the markets about this stock. Help you make up your mind if you want to invest in this stock. So let's get right into it. So Affirm stock rockets more than 90% after the IPO. So the company makes lending products that helps people make online purchases in installments. Basically, like like if you go finance a car, and they're basically like the banks, right? So Affirm Holdings share has nearly doubled in the midday trading Wednesday after the financial technology company made its public debut. So shares of Affirm, ticker symbol AFFRM, if you want to check it out, opened at $90.90 Wednesday after listing on the Nasdaq, with the first trade coming in around 12:20. So it took a little while. The company priced its initial public offering at $49 a share late Tuesday, above an already raised range of $41 to $44 a share. So shares have recently changed hands, just shy of $98. So the company raised at least $1.2 billion through the offering. Underwriters have accessed the overrollment of 3.7 million shares beyond the original uh, 24.6 million. So they scaled back the shares a bit. So a firm reportedly delayed its IPO from last year, given its first day stock move from Airbnb. So a firm led by PayPal Holding. So this is led by PayPal Holding co-founder Max Levchin. I hope I'm saying your name right, homie. Offers payment options that let people make online purchases in installments. The company receives compensation from merchants when customers opt for one of Affirm's lending options. I was just watching an interview with him, and he was breaking down this whole thing. I'll put the interview below. Check it out. So Affirm has low interest rates, because they were asking him how does he make money, from consumers, and he started breaking down, going into that. Offers simple interest loan products through which it also gets paid on consumer end of the transaction. See, that's how they make money right there. Yeah, 'cause they asked him that because it's like if you're just giving away, how you making money. So Leverage Stone Market watched that the transparency in terms of how much consumers will ultimately be paying for a given product is becoming a required feature and not a nice to have among the generations that are currently financially active. So revolving credit is a tool that is not useful as it's dangerous, he said in an interview with Trading Begins. When Trading Begins, Levitin predicted that the majority of established players would shift to simple interest products over compounding ones, right? So the company's biggest customer is Peloton. They make the bikes, which account for 28% of Affirm's revenue in the latest fiscal year, which was in June, right? So, of course, the pandemic created a favorable environment for more conscious shoppers seeking a way to financially buy products online in a seamless manner, safe, because everything obviously now has germs on it. So, online, they see a space where they can take over, and this stock is pretty interesting. I'm gonna do more research. I don't know if I'm investing in it yet, but let me know, what do you think about this stock in the comments. Would you invest in this company? The dude that co-founded PayPal back in it, so that's a pretty good backer, pretty solid. So Levchin sees big opportunities ahead and argues that we're still in the relatively early innings of what payment and money looks like, and calling the financial service sector perhaps the largest in the world, alongside with energy. So Affirm has been growing its industry merchant base, which now stands at 650,000 brands, and the company has arrangements with businesses like Walmart, big name, um, and other areas holding potential is that customers' loyalty. He said, I've learned not to pre-announce products the hard way. Though he noted that there's an enormous amount of opportunity recording customers for bringing their money to the merchants they love. Basically like a credit card, right?